Hello and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It's Wednesday, April 7th, 2021, and I'm pre recording this Trading Places Live for Thursday, April 8th. Futures currently are pointing to a higher open on Thursday. Still got a long way to go, obviously, but we got um, slight gains in Dow futures. S&P a little bit stronger, and NASDAQ is definitely leading on a relative basis. We're seeing a number of these large cap NASDAQ stocks come to life. We're going to talk a little bit about that in just a minute. Let's go through that agenda for today. We're going to start off with the daily market recap, and then we'll get into talking technically. A new segment called Former Leaders. Going to go in and take a look at some of the stocks that really had strong 2020s, but they've kind of come back to reality in 2021. So we'll take a look at the charts and see what it might take to get those going again. Then we'll do the earnings spotlight. Got a couple of companies be reporting later this week. Of course, earnings season kicks off next Wednesday with a couple of large financials. We've got JP Morgan, Wells Fargo, and Goldman Sachs all reporting next Wednesday. So that'll be the official kickoff of earnings season. And then we'll wrap up the show today with 3 you must see, including one stock looks like it might be in a head and shoulders pattern. I don't really look for topping patterns when I believe we're in a secular bull market, but this is in a group that's not performing well, and it's also not a good stock on a relative basis. So stocks like that, I do pay attention to these bearish patterns, especially if they confirm. So we'll talk about that at the end of the show. But before we get into any of that, let me take you over to earningsbeats.com. If you're new to Earnings Beats, we do have a free newsletter, Earnings Beats Digest. Simply type in your name, email address, hit that subscribe, and you will get the newsletter on Mondays, Wednesdays, and Friday mornings before the market opens. Normally, the newsletter articles feature, some of the things that we think are really important in the market. So relative strength, earnings, and so forth. Those are the things that we're really going to key in on. I think you'll find the newsletter to be very educational. All right, moving on to the daily market recap for Wednesday. And you can see that overall, didn't really do a whole lot. Saw a little bit of relative weakness in the mid and small caps. We've been seeing that of late. But otherwise, the market struggled to tack on more gains, but at the same time, didn't really give up much from what we have tacked on in recent sessions. Dow Jones Industrial Average up 16 points, S&P 500 up 6, 4,080 now on the close. We're getting close to 4,100. The NASDAQ down 9 points. So we did see a little bit of a pullback there, but price action now well above both the key moving averages. And you can see that 20-day moving average trying to get back up through the 50. So definitely some positives that we're seeing in the NASDAQ. Mid caps, small caps, both down. And small caps, worth pointing out, we closed back below the 20-day moving average. Now, I think after we went back down recently and put in this double bottom at 1250, I think we're sideways consolidating. So I don't really view the moving averages at this point on small caps to be as important as when you're trending to the upside like we saw at the end of 2020 and in the first couple of months of 2021. That rising 20-day moving average was excellent support. Right now, since breaking below and putting in that double bottom, I think until proven otherwise, I would just assume that we are in this period of sideways consolidation, meaning that we could go below these moving averages back above and so forth. I don't know that they're going to provide us a great signal. I think we're going to need to either see the breakout above 1400 or the breakdown below 1250. Until then, it's just consolidation. All right, moving on to the sectors. Communication services up about 0.75%. Technology up a little more than 0.5%. Financials roughly 0.5%. Energy slightly less, but still up for the day. And the one primary laggard on Wednesday was material stocks. And part of that could have been a nice reversal on the dollar right at the 20-day moving average. So materials weak on the session, down 1.7%. And certainly failing to keep up with the other sectors on Wednesday. All right, 10-year Treasury yield. First as far as economic reports go on Thursday, the only one we have out that's of any significance is the one we get every Thursday. Initial jobless claims, which expected to come in at 680,000 last week, 719,000. So it would be nice to see that go back down below 700,000. 10-year Treasury yield, as you look at it, as I've said, I think we've rolled over on the PPO. I think the yield to the upside, the momentum has slowed. And as a result, I think we're going to struggle to get through 175, at least for a period of time. And we're going to want to watch this 20-day EMA. We actually tested it for the first time in about 9-10 weeks on Wednesday, with that low actually coming down and touching that 20-day EMA. Like I said, we hadn't seen that in the past 9 or 10 weeks or so. So it does look like we're getting a little bit more fallout from that slowing momentum, the negative divergence that I've been talking about recently. And if we do fall below the 20-day, I think that could really start to impact some of the financials that have made big runs. But it's going to be, mixed signals, because even if the Treasury yields fall, I think what we're going to hear from the banks and from Goldman Sachs and so forth when they report next week is that things are looking up. I think they're going to beat by a wide margin in earnings, and I think they're going to raise guidance. I think many of those banks and investment services, life insurance companies, a lot of the asset managers and so forth, I think many of these financials, we're going to see raised guidance and some pretty strong quarterly reports. All right, let's keep moving. Talking technically. And what I wanted to do today, I wanted to just show you, this is the NASDAQ 100 divided by the NASDAQ. So it's a relative chart. And you can see that the NASDAQ 100 on a relative basis has really struggled since the September high. So if you remember back, beginning of September, it was actually the overall market looked very toppy. And I wrote an article in Trading Places, my blog, talking exactly about that we were seeing volatility pick up, which is unusual when you see the market doing well. It just told us that the market was getting a little bit nervous, and that's unusual when the prices are going higher. So anyway, that was the top. And while much of the market has recovered, and many areas like the S&P and the Dow and so forth have gone on to new highs, even the NASDAQ's gone on to new highs. But this relative strength chart shows you that many of the largest NASDAQ stocks have really struggled since September on a relative basis. Well, that has changed here over the last few weeks. I mean, you've seen companies like Apple and Microsoft and Google and even Amazon, many of these companies, Facebook, all doing really well recently. And you can see it in this relative chart, the strength that is returning back into this area. I would not ignore that. In fact, I think if this group pulls back, maybe we're going to get a pullback with options expiration. We'll see. But if it does pull back, I would be ready to jump in, because I do think we're starting to see that money rotate now back into some of those large cap tech stocks. All right. Speaking of those large cap tech stocks, and they're not all tech, some consumer discretionary and so forth, but let's go ahead and pull these up and take a look at them. First one I want to show you is Facebook. So Facebook went sideways. Here was that September high. And you can see Facebook was just going sideways. Now, Facebook wasn't going down. This chart that I showed you, this doesn't mean that the NASDAQ 100 was going down. It's just that it's not keeping pace with the rest of the NASDAQ. So the large companies were underperforming some of the other stocks. And here is Facebook, which was going sideways, was unable to break out. Well, it just broke out. And so when you're consolidating pretty big gains like Facebook did, I mean, you can see we basically doubled in a pretty short period of time. It takes a while to consolidate that. And that's the argument I've made with a lot of these growth stocks, is that they made huge runs. We're seeing some normalization, money moving away from growth and into value. But these growth stocks, in my opinion, are not dead. And Facebook is one now that has broken out and is starting to look much better. But let's go through the others. Amazon getting back up through moving averages, really important. Now, we still got some overhead resistance, a couple of different levels, and we're going to have to get through about 35.50 to really get things going, to get a breakout similar to Facebook. But things have definitely improved on Amazon. Apple's got key resistance right here at about 129. So we finished near 128 today. We did close back above the 20-day, which was, or excuse me, the 50-day, which was nice. We hadn't done that since back in mid-February. So we are starting to see strengthening on the absolute charts, in addition to seeing the relative strength start to kick back in again. So Apple looking better, but I'd like to see it get through 129, 130 on a closing basis. And then I think it really could make the run back to that 145 level. Netflix also consolidating here, but moving back up through key moving averages. The 20 turning back up. We're trying to get that golden cross back above the 50. Overall, I think this is another one that really we've just seen a lot, many months of sideways consolidation. Short term, we've got support down around 490, resistance around about 590, and we're sitting right in the middle of the range at 540, though we are starting to strengthen. So I would give the edge to the bulls at this point on Netflix. Google, if you look at Google, big breakout here. Very difficult not to like Google. Volume picked up on this move through, a little above that 2100 level. Now we've got the 20-day coming up here from underneath. Any kind of a pullback, 4 or 5% back to the low 2100s, I think would be a great opportunity to get into Google. Microsoft, very strong, making a breakout above the February high. So, we've seen the NASDAQ and some of the other key stocks struggling to get back through those highs earlier this year. Microsoft, Google, a couple of big names that have actually forged on to new highs. Applied Materials, this is one of my favorite stocks, certainly one of the strongest in the semi area, continuing to power forward. Look at the volume that's been coming in to Applied Materials. So I think that one looks good. Lam Research is another one. Both of these stocks are in our portfolios. Lam Research, you can see the AD line also has strengthened quite a bit too, but kind of not exactly an ascending triangle because you want equal highs, and these aren't exactly equal highs, but they're pretty close. And then you can see the lows are rising. So it kind of gives you a little bit of a ascending triangle look, but we broke out and we did so on increasing volume down here. So Lam Research, I think, looks strong, very similar to Microsoft and Google. Any kind of a pullback to test the breakout level and or the rising 20-day moving average, I think would be awesome. And then Micron hasn't made the breakout yet, but this is another strong semiconductor. We are right up against this 95 level. So I think we have some real good potential here to get this breakout. It's going to require a close back through 95, maybe 95 and a half. So look for that. And I'd like to see the volume confirm on a breakout. All right, let's keep moving. I'm going to go into former leaders. So we had a number of stocks that had performed exceptionally well last year. They just kept running and running. And I know you think, hey, they're never going to stop going up. Well, they do. And 2021 has been rough on some of these stocks. So let's start off with Plug Power. And I'm going to look quite a bit at the renewable energy and the automobile industries, because these two were the two that really led in 2020. I mean, some of these stocks just made huge moves to the upside. Plug Power was under $5 in June. It went up to 75. That's a 15 bagger in 7 months. Now, I know, you look at it now and you're like, oh, the stock is dead. Well, it got so far ahead of itself. I mean, you've got to give these stocks some room. Now, would I be jumping in saying, hey, it's gone from 75 to 32. Now's the time to jump in? No, I'm not saying that. But what I am saying is when I look at this chart, there's a couple things I would pay attention to. Number one, the AD line continues to move higher. So even though price action keeps going down, it seems like whenever we have volume, we tend to close in the upper half of the candle for that day. And that's how you get rising AD lines. And when you keep closing in the upper half, it's telling me that we do have buyers during the day. Even though the price action has been going lower, the AD line moving higher tells me that there's a reasonable chance that this stock is being heavily accumulated through this weakness. Now, does that mean I would just jump in now? No, I want to see it get better, stronger technically. Look at where we keep failing, that declining 20-day moving average. I wouldn't even begin to think about Plug Power until we get back through that 20. I mean, you could maybe, if you go down to 28 or 29, leave a long tail below this prior low and hold that, you could take a chance on the low there. But if it goes in and sets a new low, I'd get right back out. I don't think we're going to see Plug Power really start to move until we can get back through that 20-day moving average. So let's watch for that. The other thing that I would watch for, we're looking at the daily charts, and daily charts look horrible. Look at the weekly chart on Plug Power. And if I annotate this, the other, use that Fibonacci tool here at StockCharts. Because if you go down and you grab that low and then you go into the high, we are almost right on that 61.8% Fibonacci retracement on the weekly chart. I mean, right around the $30 level. That's why if we get that false breakdown, like I was talking about on the daily chart, that could signal a area where we would see a big reversal, and that Fibonacci would support that. So I'm just pointing out some possibilities. If I was really aggressive, you could try to buy into this weakness. I like to see things confirm a little bit more. So I would simply say, let's watch that daily chart and let's get that back through the 20-day and back above the recent high. I think a move back up to about 38.39 would really start to look good. Now, you might say, well, it's at 32. I don't want to give it $6 to the upside. Well, if it ends up going back 75, you're not going to care about giving up that $6. But if you want to take a shot, like I said, if it comes down and you do look, if it looks like it's breaking down intraday and then reverses back to the upside, that would be a really good sign for Plug. But let's take a look at some others. How about Fuel Cell? Fuel Cell, very similar. I mean, look at the run, $2 to $28, almost $30. Again, 15 bagger in 3 months. So yes, it's been a rough go of it, but if you had bought the stock 4 or 5 months ago and never looked at it again, and then just opened up your statement today, you'd have been ecstatic. If you didn't know that it had gone up to 30, you'd say, hey, 2.5 to 12.5. Wow, 5 times my money in 4 or 5 months. But it's hard to keep perspective when you see a stock dropping from 30 to 12.5. It's lost 60% of its value. So it's all based on perspective. If you bought here at the top, you think it's the worst stock ever. If you bought down here at 2.5, yeah, you're upset that it's fallen back some, but you've made a ton of money. It gets back to perspective. Watch to see when we can get a definitive break back up above that 20-day moving average. That's what I would look for. Or maybe a double bottom, false breakdown kind of a thing that I was just talking about with Plug. How about Ballard, BLDP? Very similar. Again, huge move up, big pullback, struggling to get through that 20-day EMA. How about SunPower, SPWR? You starting to see a pattern here? All these stocks made these big runs into the beginning part of the year, topped, and we have been trending down ever since. So if you're trying to trade these on the long side, they've been very difficult, but they're not trending higher. The trend is not your friend on these stocks right now. They may be, and it might be tomorrow, it might be next week, it could be next month, maybe it's next year. I don't know when they get going, but you want to watch to see when they begin to trend higher. And so far, we're just not there. Moving on to the autos. I mean, of course, everybody likes to follow Tesla. I really like Tesla. And I'm on the record a long time ago talking about Tesla. I mean, this has been probably maybe close to a year and a half now that I've been talking about Tesla. And I'm not giving up on it now. I mean, anybody who, has been following it since it was 900, now it's at 670. Of course, it doesn't look very good. You're down 25% in 2 months. What's the like about that? But again, keep things in perspective. If we look at that weekly chart on Tesla, I think it's pretty clear this has been a very, very solid company. Now, it may continue to consolidate. I don't know. But I do believe that their growth is going to continue. This is a major growth story. I think that they just recently announced that their deliveries were better than expected. And I think their earnings are going to beat. I believe that their future earnings potential is going to continue to be increased. And as a result, I think their valuation will follow suit to the upside. But maybe it's run so much that it needs to consolidate further. We're going to find out. But I do like Tesla. But just like the other stocks, this one did, well, unlike the other stocks, I should say, this one did get above its 20, and it just came down and tested it. So tomorrow might be an interesting day to watch Tesla. How does it react to coming down and testing this 20-day? Do we just go right back down below it, or do we start to turn back to the upside? One last thing I'll say about Tesla, that AD line just recently put in an all-time high. Literally right at the end of March. So even though we've pulled back and things don't look so great, 25% down from the high, the AD line tells me that even though it's been going down, we have plenty of willing buyers out there on Tesla, and that in the end could be the difference. NEO. Oops, wrong one. All right, so NEO, again, very similar to these renewable energy stocks, very similar to Tesla, only that NEO hasn't gotten back through its 20-day. So it's been trading beneath it for about 6 weeks now. And it's got a lot of work to do here still to get back through that moving average. Now, it does have a double bottom in at 35. If you come back down and maybe we put in another false breakdown at 35, maybe go down to 32 intraday, similar to this tail, come back up and close above, that would be really good to get a break back up above that 20-day moving average. So let's keep this one on the radar. And the last one I'll talk about here is Blink. Blink Charging. This one did get through its 50. It's trying to hold on. One thing that's really important to keep in mind with Blink, it's heavily shorted. There's about 40% of its float short right now. So if we do get a breakout, we want to be, cognizant of the fact that we could see a lot of folks running for cover from the short side. That could drive the price up as well. Let's move on to earnings spotlight. So I just want to talk about a couple of companies real quick. We're going to start off with Constellation Brands. So STZ, we did have a double top over here. They're coming out with earnings, by the way, tomorrow morning. Again, I'm doing this pre-recorded on Wednesday evening. So by the time you get this, you may already see the earnings report. But, when I look at the chart, clearly, I think 240 or maybe just above 240 is going to be the key to try to get this breakout. I'd like to see that with earnings. Looking at a relative strength chart, we have seen Constellation Brands really start to pick things up on a relative basis. So I think, this is pointing to perhaps a strong report coming out. And if we do get that strong report, we haven't really done much the last few months. We've been going sideways. So I think we do have an opportunity maybe to make a breakout in the morning. Let's see how those numbers come out. If they're strong and we gap up, the number I would look for is 242.20. An open above 242.20 would begin to point to higher prices ahead. That would be my first clue. So watch that number, 242.20. The next chart I wanted to show you is Conagra Brands, CAG. This is in the food products area. Stock did clear the August high barely, has pulled back, and it's holding its 20-day moving average. So everything's okay here so far. On a relative basis, Conagra was going lower relative to its food product peers. So I think that's a little bit of a problem. Also versus the S&P, it's been downtrending. And you're in a consumer staples area, which has been downtrending relative to the S&P 500. So you got a stock that's not in a great relative position. It's not in a great group. And I would be a little nervous. I would not want to hold. Now, it is staples. I don't think you're going to see any kind of huge move one way or the other. These stocks tend to be much less volatile than some of the more aggressive names in technology and consumer discretionary and so forth. But I would say let's watch 37 to the downside, 39 to the upside. I think we're in that range unless the gap tomorrow proves otherwise. So let's watch that. LEVI. This is Levi Strauss. This is a company that's been performing really well, strengthening, pulled back, starting to strengthen again. But look at the relative strength. It's been a leader in the clothing and accessories area. So this is one I certainly would try to keep on my radar. And I would expect a big number coming out on LEVI. I believe this is after the bell on Thursday. And then WDFC, this is WD40. After making a big move up through mid-February, we went down for a while, came back up, trying to get through, I think, 320, 321. I'd watch that level pretty closely. I personally wouldn't trade a stock like this because the volume. You can see the stock trades well under a couple 100,000 shares a day, might even average less than 100,000 shares a day. I pointed it out because the AD line looks good. The price action's been pretty good, but it's not one that personally I would trade simply because of the light volume. The last one I'll mention is Jinko Solar. I talked about renewable energy stocks earlier in the former leaders segment. And Jinko is, well, I could have discussed this one then as well. It's been downtrending below the moving average, that 20-day moving average. I mean, just look at it. It's been hugging it all the way down. So what we want to see is a move back up through. Let's get a confirmed break back up above the 20-day EMA. I think at that point, we can start looking for the chart to repair itself. Until then, I think it's a little premature on these stocks, and you got to be willing to ride it further to the downside if you jump in on the wrong side of the 20-day. All right, let's wrap this up with the 3 you must see. I'm going to start off with Sherwin-Williams. So let's ask Sherwin-Williams. AD line weak. After going sideways for a while, though, we did finally make a breakout. We pulled back, held above the 20, and made another charge over 3 days with pretty good volume. Had a rough day on Wednesday, but we're still above the 20-day moving average. I think anything back down to around 246 is actually a buy on the stock. So Sherwin-Williams, I think, is on its absolute price chart looking pretty good. Now, if you want to find the weakness in the stock, all you have to do is look at relative strength. So Sherwin-Williams posted a relative high back in September of last year, and we've been, for the most part, downtrending since then. So, and what that means to me is if, we've just been, we've just broken out from going sideways for a while. When you go sideways in a secular bull market, you're going to underperform. I talk about this a lot. So as if the stock was downtrending and it was in a horrible group, then I would be a little more concerned. But I mean, the group's has been okay on a relative basis. It's been so-so. I just think it, needed that breakout, and I'm willing to give it, the benefit of the doubt now that it's made the breakout above 250. But if we were to pull back much below 245, 246 on a closing basis, I'd be careful. And the reason I would be careful is because of that relative weakness. We've been consolidating. We finally broke out. We don't want to fail on this breakout. All right, next up is Sale. Now, when I look at Sale, this is in the software space, and this was a leader up until a couple of months ago. And like so many other stocks, you can see it downtrending relative to that 20-day moving average, staying below it. We tried to get through, and it came right back down today on Wednesday. But this is one very similar to some of the others like Tesla. I think you got to, keep things in perspective. On a weekly chart, this stock ran from just above $10 to 63 or 64 and is now pulled back and is settling down. The weekly PPO is moving back toward the center line. I think you just got to, again, keep things in perspective. Yes, Sale does not look particularly good on the daily chart, but the weekly chart tells me that if the daily turns, we could have another push to the upside, another run to the upside. So I'd be watching that. Last stock I want to show you was ENDP. I see left shoulder, neckline, head, right side of the neckline, right shoulder, and then back down again. If we get a big heavy volume breakdown below 650, I would be very, very careful with ENDP. It's in the pharma area. You can see pharma's 52-week low relative to the S&P, and this stock has started to break down on a relative basis as well. So watch, I would say 6.5, close below 6.5 with increasing volume. I'd be a little nervous. All right, that's it for me. Everybody have a great day. Enjoy your Thursday. Enjoy the Masters tournament this weekend. Always a big weekend for me. And have a great weekend. Be back next week. Happy trading, everyone.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.